Okay, so India and the US have just dropped news of a massive new energy partnership. And look, on the surface, this thing seems to come straight out of left field, right? Especially when you think about all the recent political friction between them. So what is really going on behind this pretty surprising deal? Let's get into it.
And it really all starts with this one number, 10%. That's the slice of India's absolutely enormous liquefied petroleum gas, LPG, market that has just been opened up to the United States. And for U.S. energy exporters, well, this is a huge, huge opportunity.
All right, so let's cover the basics. We're talking about a landmark agreement where Indian government-owned companies have basically promised to import 10% of the country's entire LPG needs, and they're going to get it directly from the United States. Shipments are set to kick off in 2026. And make no mistake, this is a pretty historic move.
Now, what's really interesting here is how the deal is structured. See, this isn't just some private sector agreement. Nope, this is a direct pact between India's state-owned oil companies and their counterparts in the U.S. It's actually the first of its kind. And get this, Union Minister Hardeep Singh Puri announced that this single deal is projected to boost total U.S. exports to India by a pretty significant 3%.
Which, of course, brings us to the big question. The elephant in the room. When you think about the recent history, all the tense trade relations, and some really harsh political language coming from the U.S., why on earth would India agree to this now? It just seems to fly in the face of everything we've seen over the last few years.
And let's be real, we can't forget it wasn't that long ago that the U.S. administration was using some pretty aggressive language, right? Claiming India's economy was failing and that they'd have to come back begging for a deal. This was a time of super high tension, with punishing tariffs being thrown around.
So yeah, that brings us right back to the core question. Why would India sign off on a deal that looks like such a huge win for the very same administration that was hitting them with those tariffs? Well, the answer really has two parts. And the first one? It's all about simple, straightforward economics. See, at its heart, this whole deal is being driven by a really powerful economic incentive for India. It's not just about the politics. At the end of the day, it's about getting the best possible price and making sure that energy supply is secure.
And the logic? It's all right there in the numbers. Thanks to that massive shale boom, the U.S. is now the world's largest LPG exporter, and its prices are just way lower. We're talking something like $450 per metric ton from the U.S. Compare that to $500 to $650 from India's usual suppliers in the Middle East, like Qatar and the UAE. That's a big difference.
Now, I know what you're probably thinking. Hang on, what about shipping? The U.S. is halfway around the world. And yeah, that is a totally fair point. But the price difference is just so massive that even after you factor in all the logistics and the transport costs, the American gas is still the cheaper option for India. It's kind of wild.
And to really understand why every single dollar saved here matters so much, you gotta look at this number. 40,000 crore rupees. I mean, that is just a staggering amount of money. And it's what the Indian government spent last year just on subsidizing LPG for its own citizens.
So let's break that down a bit. Last year, global LPG prices just shot up. We're talking by 60%. But to protect consumers, especially folks under programs like Ujjwala, the government kept the price of a cylinder at around 550 rupees. The thing is, the real cost was double that, about 1,100 rupees. So the government just had to eat that difference. By getting cheaper LPG from the US, India can start to bring that massive subsidy bill way down.
But look, cheaper gas, that's really only half the story here. This energy deal is also a very calculated move, a piece in a much larger, much more high-stakes game. And that game is the negotiation for a massive trade deal between India and the US.
So here's the big prize that India has its eyes on. Right now, some Indian goods heading to the U.S. get hit with tariffs as high as 50%. 50! But these ongoing talks could see those tariffs get slashed down to a range of just 12 to 15%. I mean, that would be an absolutely massive boost for Indian exporters. It would make their products way more competitive, especially against regional rivals.
What we're seeing is a classic give and get situation. India is putting some major concessions on the table, things that are really important to the U.S. We're talking about opening its market to American soybeans and corn, and now, of course, giving up a 10% share of its LPG market. And in return, India gets what it desperately wants, those dramatically lower tariffs and much better access for its own goods in the huge American market. This LPG deal, it's a really powerful bargaining chip in that whole exchange.
So, where does all this lead? Well, while the signs are definitely promising, the final outcome is still kind of up in the air.
The reports say they're in the final stages, but you know how these things go. Nothing is certain until the ink is dry.
And of course, these huge negotiations can be incredibly fragile. A deal can look like it's 99% done and then completely fall apart over one single sticking point. It's happened before. Plus, there are a ton of crucial details still on the table. Things like potential benefits for Indian workers who want to go work in the US. So, yeah, there's still a lot to be ironed out.
So, at the end of it all, we're left with this big question. Is this LPG deal just a simple matter of economic necessity, or is it actually a brilliant strategic move to unlock a much, much bigger trade victory? It's a calculated risk, for sure, trading a piece of the energy market for what could be a massive boost to the entire export economy. And really, only time is going to tell if this gamble actually pays off.